What's up, traders? So today we're going to talk about two different companies that are setting up for a perfect leaps opportunity as we speak. And so we'll look at all the data and then look at a potential trade within the Moomoo platform. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader, and I've been blessed to be able to replace my business income with the money that I make from the stock market. Now, do me a huge favor and go ahead and smash that like button to help out the YouTube algorithm. And do remember that I am not a financial advisor, and this is not financial advice, nor is it a recommendation to buy, sell, or hold any equities or options contracts. All trading comes with risk. Now, as always, first things first, the word of God that has to do with money, investing, or business. And today's verse comes from Ecclesiastes 11:2, and it says, "Invest in 7 ventures, yes, in 8. You do not know what disaster may come upon the land." All right, so diversifying your investments and your income is not just something that's really smart to do, it's also biblical as well. So when you are investing, when you are trading, you don't want to just use one single company or 2 or 3. As the word says, invest in 7 ventures, yes, in 8. So the more, the merry. But speaking of folks who are diversifying their income, I have to shout out members of the Trader Freedom community. So first here we have Jared. He says, awesome 0 DTE trades from Rashad, maybe a little greedy, but I held to expiration for another gain of $545. And Jared is very new. And within his first week of actually trading, he is making some amazing gains. So shout out to you, Jared. And then Justin here did some trades on Tesla, NVDA, Palantir, AMD, and TSM and brought in $4,055 for the day. All right, so shout out to you, Justin. That is an amazing day. And then I definitely have to shout out Steven, who opened up a ton of Leaps contracts on Thursday and is already reaping the benefits of being greedy while others were fearful. All right, open up Leaps for NVIDIA, Hood, QQQ, and Amazon. And so shout out to the entire community, constantly improving. But if you're not part of the community and you would like to join, I am right now running a Black Friday special. It is the first link in the description. Fill out the form and you'll be sent a code to get a discount. The discount is active right now, so you can come and join and trade to freedom with us. But the sale will be ending soon, so make sure you take advantage of it. You'll get my trades, you'll get access to the course, you'll be able to ask me questions at any given time, and you'll be within a community of other traders who all have the exact same goal. And so if that's something you like, take advantage of the sale. But with that, let's get down to business. Now I have SPY pulled up and we are currently having a huge green day in the market. And this comes just a few days after we had a huge sell-off that happened right after NVIDIA's earnings. Now, part of the reason we are having such a green day is the increased probability that the Fed will go ahead and cut rates in December. Now, you can currently see that we are at about a 79% chance that the Fed goes ahead and cuts rates on December 10th. Now, about a month ago, it was at about a 91% chance. However, it dropped to as low as about a 42% chance just a week ago. And part of the reason the chances have been increasing recently is because the Fed speakers have been discussing their dual mandate to not only keep inflation low, but also for maximum employment. And the job numbers have not been looking that great recently. And so that is what is increasing the likelihood that the Fed will need to cut here at this upcoming meeting. And so with more and more data coming out, there is a chance that we could still get our Santa Claus rally to end the year. However, no matter what happens, there are 2 companies that I'm currently looking at as a potential for an upcoming Leaps opportunity. And the first stock is Amazon, ticker symbol AMZN. Now we'll get to the technicals and why this is looking like an upcoming Leaps opportunity here soon, but I want to talk about the fundamentals for a quick second. Now, Amazon has the most revenue of any company in the entire world. However, what a lot of people do not know is that they do not make that much money from what they are known for, which is delivering packages. And the reason for that is because their profit margins are very, very slim because they have a ton of expenses, with the biggest expense being their employees, as they have nearly 1 million employees that they have to pay. Well, Amazon is spending more money on AI development than nearly any other company in the entire world. And what they are looking to do is they are looking to replace a lot of the employees that they will need to hire in the future with AI robots. And if they are able to successfully do so, then that will increase their profit margins by quite a bit because they already have a ton of revenue. But if they can take that revenue and increase their profit margins, which will leave more money for the bottom line, then there is an opportunity in the future for it to become the most valuable company in the world. And we can see here from this article, it's titled Amazon's Plan to Replace 600,000 Workers with Robots Just Leaked. Now, this information was released in October last month. And Amazon states that they are using these robots to replace the workers that they would have hired in the future. So what they're saying in their press release is saying that no, They're not building these robots to fire the employees that they already have. However, they're supposed to replace the employees that they would have hired here in the future. Now, I don't know how much I believe that, but what I do know is if they are successful with building out this robot workforce, then their net income is going to skyrocket. And since every investment is the present value of all future cash flow, I want to get access to those future earnings. Now, if we go back and we look at some of the technicals for Amazon, let's go ahead and pull up this chart here. Now, here we can see that Amazon went as high as about $258 on November 3rd. However, since then, just like with the rest of the market, it's had quite a sell-off, going as low as $215 on Friday. Now, one thing I want you to notice is it hit that 200-day moving average and it bounced right off of it. But also this about $210 to $215 level has been support for quite some time. All right, going all the way back here to June, we can see that it has been support. Now, one of the indicators that I love to look at when I'm looking at any leaps opportunity is the stochastic. And I always look at the weekly candles when looking at the stochastic. All right, so I'm going to switch here from the daily stochastic to the weekly. All right, now looking at the stochastic, what I want when I'm entering into a leaps opportunity is I want for the stochastic to be pointing in an upwards direction. Now, we can obviously see from here that it is still pointing in a downwards direction. And so what I would be waiting for is for the stochastic to start turning in an upwards direction again, because all the stochastic is a momentum oscillator. And so quite simply, if the stochastic is pointing upwards, that means the stock has upward momentum. And if it's pointing downwards, that means the stock has downward momentum. And we can see going all the way back here, every time that it has been pointing downwards, the stock price has been going down, but as soon as it starts pointing upwards again, the stock has gone on quite the run, all right? And so from here, we see it went from a low of $151 on the week of August 5th of 2024, and then the stock price increased right after the stochastic pointed in an upwards direction for several weeks and several months thereafter. And then we can see the same thing happen right after the tariff drama in March and April, but we can see right here, the stochastic started pointing upwards, and then it went on a bullish run again. And so what I'm doing is I am simply waiting for the stochastic to start pointing upwards again, and then I will attack with leaps contracts. However, while I'm waiting, I'm going to go ahead and start selling puts and credit spreads in order to bring in some income while I wait around for the stochastic to start moving upwards. And looking at the analyst ratings, we can see that out of 57 analysts, they currently have it as a very strong buy. And as far as their numbers, they have the target prices at a high of 360, a mean target of 295, which this is the number that I pay more attention to. And then their most bearish of analysts has Amazon at a target price of 230. All right, but again, I would be paying attention to this 295. All right, and although I'll be waiting for the stochastic to start moving upwards, let's go ahead into the Moomoo platform and look at a potential trade so that we are prepared when the opportunity presents itself. But first, I have to give a huge shout out to the sponsors of this video, Moomoo. Now, beyond just being an amazing brokerage and one that has tools way better than most brokerages that I know, right now they have one of the most amazing sign-up offers as well. When you open up an account using the link below in the description, not only can you get up to $1,000 of NVDA stock, but you can also get up to an 8.1% APY on your idle funds. And that is just crazy. But what was just added, they added in an additional $100 cash reward. When you open up an account using my link below in the description, you will not find this anywhere else. So make sure that you take advantage of this. But on top of all of that, their mobile platform is next level. Taking a look at their mobile app, so you can see here, you can see a lot of general information such as earnings and earnings calendars and earnings beats and economic calendars. However, what I like most is this investment theme. So if we click on investment themes, here they categorize stocks based on what they're impacted by. And so what I like most is this one that's called Nancy Pelosi Portfolio. Now, if you're not familiar, Nancy Pelosi is a US Congresswoman, and she seems to always select the right stocks right at the right time. And so Moomoo conveniently put all the stocks that she is currently investing in right here on this list for you to see. And so if you just wanted to follow what Nancy Pelosi is doing, you could follow this investment theme in Moomoo. But go ahead, check it out. The link is below in the description. You can get up to 60 free stocks, and you can only get that with this link. So go ahead and click it, and you could thank me later. All right, so here we are in the Moomoo platform, and I want to show you the very first news article that pops up, and I definitely did not have this planned and know that this is going to be here. But it says that Amazon cuts thousands of engineers as it rolls out AI tools to replace them. And so if we go ahead and look at it, it says Amazon is cutting thousands of jobs just as it doubles down on artificial intelligence, eliminating roles, especially engineers, that its own AI tools are poised to replace. The company slashed over 14,000 jobs last month across nearly every major business, from Amazon Web Services and devices to retail and advertising, and engineers took the biggest hit. State-warned filings in New York, California, New Jersey, and Washington show that engineers accounted for almost 40% of the 4,700 plus roles eliminated in those states, representing a significant share of Amazon's largest layoff round in its 31-year history. All right, so it's already starting. Now, again, Amazon has nearly 1 million employees. So 14,000 isn't a huge cut, but again, just like this article says, it is the largest layoff in the 31-year history of Amazon. And so it is a pretty big deal, and I believe it's just going to continue happening over and over and over again. And as that continues to happen, Amazon's profits will likely go higher and higher and higher. All right, so let's go ahead back to the Moomoo platform. Let's head on over to the options chain. Of course, the first thing we need to do is go ahead and select our expiration date. Now, by definition, a leaps is any long call contract that is 365 days out or more. And so you could come down here and you could select any date from this December 18th, 2026 date or further out. And the further you go out, the higher your probability of profit. All right, but the trade-off is, of course, the further you go out, the higher you will have to pay for the contracts. So let's just assume you were fine with the bare minimum because you want to buy contracts at a cheaper price. So let's go ahead to this December 18th, 2026 date. Now, the next thing we need to do is select our strike price. Now, I like to go anywhere between a delta of about 0.70 to 0.80. And so that will put me at the strike prices of 205 to 180, give or take. Now, again, the reason you want to go in the money instead of buying a contract that is way out the money is, again, you want to give yourself the highest probability of profit. All right. And also, when you are buying options, time works against you. And so a way to combat that is to buy contracts that are already in the money so that you are buying less time value up front compared to if you were to buy some of these contracts down here. All right. But if you don't remember anything else from that, just remember the delta of about 0.70 to 0.80. And so let's say we're going to go ahead and do the 0.70 delta. And this will put us at a strike price of 205. And we can see that we'll be paying anywhere between $4,870 to $4,910 right here, right now, to get access to this potential upside. Now, the power in leaps is you're paying a whole lot less for the contracts as compared to if you were to just buy the shares of the stock, right? Because every contract is worth 100 shares. And if you were to buy 100 shares of Amazon at $205, well, that would be $20,500 that you would be paying up front. However, as you can see here, we will be paying literally less than a fourth of that price. And so I'm just going to go ahead and click this, and we have added the contract to our ticket, and we can see at the mid price, I'll be paying about $4,887. All right. And since this is a buying strategy, that is also what our max loss would be in a worst case scenario situation. However, we would never sit around and lose that entire amount. And so if we come up here and we look at the P&L curve, we can see that Amazon stock price is right here where these dotted lines are. And we can see as the stock price moves up and up and up, the amount that we will make gets higher and higher and higher. And then our break-even point at expiration would be $253.87. And of course, the higher that the stock price goes, the more and more we will make from that trade. And then if we come down here on the downside, we can see how if the stock price goes down, we'll make less and less and less. However, our loss would be maxed out at the price that we paid for the contracts to begin with. All right, but I'm definitely loving the upside potential for Amazon. And of course, this is the holiday season, so they're going to have massive sales for Q4 as they always do. And so that should bode very well for the next earnings release. And I'm definitely looking forward to taking advantage of the upside potential once the stochastic shows that it is okay to do so. All right, and until then, I'm going to continue selling puts and selling credit spreads against it, which gives us a larger margin of error and will allow us to collect income while we sit around and wait for the opportunity to develop. But that is Amazon. And my second stock would be Meta, ticker symbol META. Now, here we are at Meta's chart, and obviously you already know that Meta is an amazing company, but they've been having a recent sell-off because after their earnings release, they announced that they would be taking a one-time hit due to a tax change due to the big, beautiful bill. So they had a several billion-dollar tax bill that was going to be a one-time payment. However, outside of that, they had record revenue and earnings. However, when you factor in that one-time bill, it brought their earnings way down. And so investors absolutely panicked. And once that happened, the stock started selling off and has been doing so ever since. However, as you can see, it's looking like it's trying to catch some support around this $580 to $600 level. And so if we go ahead and switch to the weekly candles instead of the daily, let's look at the stochastic. Now you can see the stochastic is already in the oversold area, right? It's already well below 20. And the stochastic K is already now above the stochastic D. And so this opportunity could be coming even sooner than the Amazon opportunity. And so what I'm just looking for now is for the stochastic K, which is the red line here, to come up above this value of 20. And once it does that, I am going to attack leaps as well. But it's not time to do it yet because the stochastic has not told us that, hey, it is okay to do so. And so right now I am just selling puts and credit spreads at much lower levels. And I'm doing that just to collect income while I wait around for Meta to do what we believe it will do here in the near future. Now, looking at the analyst target prices for Meta, analysts see huge upside potential. So there's a high target of $1,117. There's a mean target of $838, and then there's a low target of $560. All right, and so at the mean price, analysts see about a 30% upside from here. So let's go ahead back into the Moomoo platform and look at a potential trade. All right, so here we are at the options chain, and I'm going to do the exact same thing and go to this December 18th, 2026 expiration date. Now, obviously, Meta is a much more expensive stock than Amazon. All right, and because of that, you're going to have to spend a lot more on the contracts compared to if you were just trading Amazon by itself. And so if we come here and we look at that 0.70 delta, that will put us at a strike price of about $560. And it looks like we'll be paying about $13,000 per contract for this trade. Now, if we go ahead and add that to our ticket and we look at the P&L curve, because Meta is a more expensive stock, so it has a higher potential of having a larger dollar for dollar move than Amazon per se. That means there is a higher potential for money being made, right? So if we come here, we can see that Meta stock price is right here where these dotted lines are. And as the stock price goes up, we can see up here that the money being made is more and more and more. And let's just assume, just for illustration purposes, that it gets up to that $800 something price that was the mean target for analysts. Well, if we go just here to about $800, then we can see, looking at these numbers up here, if this were to happen around expiration of the contract, it would be a $10,000 gain per contract. But if this were to happen relatively sooner, then it could be closer to a $15,000 gain per contract. All right, but those are two companies that I believe has massive upside potential, and I am looking to profit from both of them. But let me know down in the comments below if you plan on trading either of them. And again, if you want to take advantage of the Black Friday sale, the link is below in the description. It's the very first link. We would absolutely love to have you come join us as we trade to freedom. But I will see you guys in the next one. Peace!